China's economy is facing significant challenges, including a deep slump, a multi-trillion-dollar underwater housing market, and threats of delisting from the US stock exchange. Yet, remarkably, in the last 30 days, China has experienced one of its strongest stock market rallies in nearly a decade, all thanks to a new strategy dubbed the economic reset. This stimulus plan aimed to push stock prices up, but many analysts believe it's only a delay to the inevitable collapse. China's latest stimulus package is poised to affect every financial market globally, from real estate to interest rates. Despite the impressive stock market's performance, we need to explore whether this massive stimulus is sustainable.
Definitely the monetary bazooka, Kelly, that you're seeing numerous interest rates being cut in China. You're seeing a lot of support for the real estate sector in terms of mortgage rebalances, as well as, most importantly, the Chinese government basically said the stock market is going to stop going down, that they're sick and tired of the mainland market's decline, and they're going to allocate 500 billion RMB to the stock market. So yeah, we're seeing the monetary side of the bazooka for sure.
Historically, China has been on an unstoppable trajectory for the past 30 years, largely due to its integration into the global economy following the 1997 reforms. This integration allowed unprecedented foreign investment, helping lift 400 million people out of poverty. However, as China grew, it also became more powerful, leading to tighter controls over businesses and trade practices that many countries allege to be unfair. The first major issue China faces is the real estate bubble. Citizens invest heavily in the housing markets, leading to soaring property prices. Developers often pre-sold homes, but as the economy slowed, many could not finish projects. To combat this, the government lowered interest rates to stimulate growth. The second challenge is rising youth unemployment, which surged due to an oversupply of college graduates compared to available jobs. Currently, the unemployment rate for 16 to 24 years olds is about 18.8%, leading many young people to seek financial freedom through lotteries rather than stable jobs. The third issue is deflation. While falling prices may seem beneficial, they signal weak demand and can lead to a downward economic spiral. Consumers are hesitant to spend money, resulting in companies reducing their workforce and further contributing to deflation. To address these challenges, the Bank of China has introduced a massive stimulus plan, including cutting interest rates, lowering mortgage rates, and providing funding for local government projects. They are also planning to release $284 billion in bonds and consider a whopping $1.4 trillion stimulus package. Although the stock market has rallied over 20% in the past month, this optimism is largely based on expectations of future stimulus rather than sustainable policies. The potential for liquidity crisis exists if banks lend too freely, and the long-term sustainability of this stimulus remains in question. This strategy might provide temporary relief, but it doesn't solve the underlying problems facing China's economy. The economic reset might provide a temporary boost, but whether it leads to sustained growth is uncertain. Thank you for watching, and let me know your thoughts in the comments.